Tunisia will seek a $4 billion loan program from the International Monetary Fund in talks that should start this week. Prime Minister Hichem Mechichi said he expected talks to last about 2 months and had confidence that Tunisia could secure financial support to help it through an economic crisis that has been aggravated by the COVID-19 pandemic. Judith Osemeke, investment analyst with Afrinvest Securities Ltd, joins us to discuss further. Judith, you're welcome. Good morning to you.
Thank you very much for having me.
Great to have you. You were talking about when last you were on the show.
It's been a while.
It's been a while indeed.
Yes.
How bad does Tunisia need this money?
I think they've reached a dire situation actually, because prior to COVID, we know that the country had always had battled economic stagnation from the times after the Arab Spring. So they've also had a volatile political environment, dwindled public services, as well as worsened standards of living. Okay, and
his prime minister said he expects the talks to last about 2 months, and that he's confident that a resolution will come through and they'll get the money. Could the talks last longer than 2 months?
I definitely think it can last longer, just because they have a huge threat from their labor unions. They seem to be very powerful, so they have to run by some of the reforms that haven't been very popular with the Tunisian people for a while actually. So it's possible that the Tunisian General Labor Union would try to stall, because even recently I know that they still requested for larger a raise in their wages, basically.
Okay. And was the IMF asking for anything in return in terms of reforms?
Yes, and this isn't even new, actually. They've always said that, they've always recommended in the past that Tunisia really looks into cutting down some of its subsidies.
Subsidies, there's that word again. Here we go again, subsidies, yeah, okay.
Yes, so they've actually recommended that they cut down their subsidies, the huge wage bill that is still an issue in the country, as well as reforms targeted towards state-owned enterprises. Yes.
So it sounds like another country we know. Is there any indication that Tunisia will follow through on those reforms that the IMF is asking for?
I think they will try to, or there'll be a little bit of a give on their part, just because even looking at their debt situation, prior to COVID, they have always hovered around 70% of their GDP.
Jeez.
When COVID hit, they reached almost 90% as of 2020. Yeah. So they do need the funds, even to finance their budget. The country needed about for 2021, the country needs about 19.5 billion Tunisian dinars. That's about $7.2 billion US. So they also talked about coming to the market to, raise sukuk bonds and dollar-denominated bonds as well. So definitely, I think they will try as much as possible. I don't know how much, the labor unions will be able to give in those terms, but yes, there would be a give. There would definitely be a give.
I want to take a look at a quote from the Prime Minister. I want to ask you whether this is whether he's being dramatic here. He says all efforts must be unified in Tunisia because we consider that we have reached the last opportunity and we must use it to save the economy. Is that being too dramatic? It sounds like something from a film. Or, this is our last chance to save the Tunisian economy. What do you make of his comments?
I don't think it's dramatic, actually, when you look at this current situation of the economy. I also think that because it's a good reminder, just because of all the power squabbles that they've had in the past, and because, these reforms that have been recommended are not very popular. So it's a good reminder to the Tunisian government, the rest of the Tunisian government and parliament, as well as the labor unions, to do what they can to actually save the economy.
All right, thanks. All right, let's switch over to Nigeria. You're an equities analyst. I'll have you talking about Tunisia. But to the Nigerian Stock Exchange, how would you describe sentiment and trading sentiment in the last few days?
So I would say sentiments have been mostly mixed, just because of the fact that consistently rising yields in the fixed income markets have, kind of centered attention towards that space. We saw at the last auction, the 364-day bill reach about 9.75%, and we're expecting it to even go to double digits. So of course, investors are looking at that market, but we're still seeing some investors take advantage of, of attractive or some of the decent results that we've seen come out over the past month. So it's kind of mixed.
Okay. Any sectors to keep an eye on?
Yes, the industrial sector, of course, the industrial sector results from Danksem came out.
We just talked about Dangote
Yes.
Cement's Q1 a few minutes ago, yeah?
Yes,
Okay.
the communication sector, MTN, as well as the financial sector, services sector as well. Yes, because of banking results.
So if, as you've said, that, because you just talked about the T-bill auction, 9.7%, 364-day. If rates do, because that's single digits now,
Yes.
if rates do hit double digits, then what's the impact on the equities market? I take it that funds will cycle out and head towards
Yes,
the
what
money
we've
market.
actually been seeing is that so throughout the year, domestic participation in the equities market has actually been low. But as of last month, we saw a large improvement, about 22% improvement in the domestic equities market, although the foreign equities market has kind of dwindled consistently still. So what we can say is that, of course, there will be a lot of attention in the fixed income market, but we might still see people take advantage in certain fundamentally sound stocks in the equities market. So there's still opportunities.
So there's still opportunities.
Of course.
Okay, I'm always asking this of every equity analyst that comes in. We had a world-beating 50% year-to-date return in 2020, right? Best performing stock market across planet Earth. We're now in the second month of the second quarter, May 4th. Is there any chance that we repeat that performance?
I won't say, I don't think we can see that good of a performance, but we will still see, as the economy continues to reopen, we will still see some traction in the equities market. I don't think we can reach those levels, but definitely we'll see something good.
Any threats of headwinds? We've got and of course the federal government has taken quick steps now to make sure that there's no threat from this new strain of the virus that's coming in from India. Are there any headwinds that could upend the market aside from what's happening in the fixed income space as virus concerns? Do you have any concerns looking ahead to the rest of the year that could trouble our dear NGX?
I think, of course, the risks are still there. There's still a possibility that the vaccines will not roll out as at a fast enough pace, compared to outbreaks. But we've had it under control over a period of time. I think the equities market reaction to, double to more outbreaks has kind of been tapered. So I think while that risk is there, I don't think it's such a large, big enough to stall or to see what we had in March 2020. If
an investor was to say, hey, Judith, how do I spread out my portfolio? You will definitely recommend a bit of equities. And with fixed income and money markets, yeah?
Yes, definitely.
Any other items there, or those are the two main ones?
Those are the two main items. I would say, like I said earlier, the industrial sector has been doing well, just driven by mostly Danksem, actually. The communication sector, driven by MTN, and also the banking sector. For the fixed income market, of course, we are looking at the primary market auctions, but if an investor cannot participate in the primary markets, you can also look towards the secondary market because we're beginning to see yields also rise in that space as well. Okay,
fantastic stuff. So portfolio diversification.
Yes.
Judith Osemeke, investment analyst with Afrinvest Securities. Thank you so much for taking us through the $4 billion loan request from Tunisia to the IMF and of course the Nigerian equity space. Thank you so much.
Thank you for having me.